Everyone in Canada has been talking about how home prices is only going to go one way, which is up. It's been an unshakable belief for decades. No matter what happens in the economy, home values will always climb higher. But what if I told you that in 2025, the opposite is happening? According to the Canadian Mortgage and Housing Corporation, CMHC, home prices are actually expected to fall this year. Yes, fall. The national average, which is about 689,000 in 2014, could dip roughly 2% in 2025. Now, 2% might not sound like a lot. You might be thinking, okay, Justin, that's just a blip. But on a $700,000 home, it's nearly $14,000. And if you're in Ontario or British Columbia, the two provinces that CMHC says will be hit the hardest, the drop could be much steeper. We're talking tens of thousands of dollars in potential savings. And here's where it gets interesting. This isn't just a theoretical forecast. We're already seeing signs of sellers adjusting. Price reduced signs are popping up, and buyers are starting to ask themselves a serious question. Do I jump in now and take advantage of soft prices, or do I sit back and wait, hoping that prices fall even more? The truth is, waiting for an absolute bottom of the market is like trying to catch a falling knife. It's nearly impossible. But positioning yourself to take advantage of the downward pressure while it's here, that's how smart buyers get ahead. So in this video, I want to break down what this market shift really means, why home prices are expected to dip, what's happening behind the scenes with interest rates and renewals, and most importantly, the step-by-step plan that you can follow if you want to turn this slowdown into your opportunity. Because here's the reality. Sellers are nervous, affordability is tight, and a rare window is opening up for buyers who are prepared. The only question is, will you be ready to act when the right home hits the market? Okay, so now that we've set the stage, let's dig into what's actually happening in the housing market right now, and more importantly, what you as a buyer can do about it. The tension in 2025 comes down to one big conflict: falling home prices versus still high interest rates. Here's the situation. The Bank of Canada currently has its policy rate sitting at 2.75%. There's speculation that we could see a small cut again this year, maybe back down to 2.5%. That's encouraging, but it hasn't fully happened yet. In other words, borrowing costs are still high compared to just a few years ago. So buyers today are asking, if prices are dropping, does that mean I'll automatically save money? And not necessarily, because your monthly mortgage payment isn't just about the sticker price on the home. It's about the interest rate you lock in. That's why your strategy can't just be wait for prices to fall. Your strategy has to be about preparing for the intersection of lower prices and improving borrowing conditions. That's where the opportunity lies. And this brings me to 5 very practical steps that you can take right now to put yourself ahead of the pack. Step number 1 is get pre-approved yesterday. This is the single most important thing that you can do. A pre-approval is more than a quick estimate. It's a full review of your income, your credit, and your debt picture. It tells you exactly how much you can afford, and it locks in an interest rate for a certain period, usually 90 to 120 days. Why does this matter in a market where prices are falling? Because sellers are nervous. They want buyers who are serious and can close quickly. If you can walk into a negotiation pre-approved, you instantly stand out. You're not a maybe buyer, you're a ready-to-go buyer. And here's another advantage. If rates happen to climb before you buy, your pre-approval protects you. If rates fall, you can usually still take advantage of the lower rate. Either way, you win. So don't wait until you see the perfect house. Get pre-approved now so that when the opportunity comes, you're ready. Number 2, know your numbers. This is where so many buyers trip up. They focus on the listing price and forget everything else. Buying a home in Ontario isn't just the purchase price. It's also land transfer tax, legal fees, inspections, insurance, and sometimes CMHC insurance if you're putting less than 20% down. And if you're in Toronto, you're paying land transfer tax twice, once to the province and once to the city. That adds up fast. Here's why this matters. If CMHC forecast is right and prices fall by 2% nationally, that could save you about $14,000 on a $700,000 home. If Ontario sees steep 5% decline, That's $35,000 in savings. That alone could cover almost all of the closing costs. So knowing the full financial picture, not just the purchase price, is critical. Build a spreadsheet, work with a broker, know what your monthly payments will be, what the upfront costs are, and where your budget ceiling actually sits. Number 3, target motivated sellers. This is where buyers gain real leverage in a softening market. When prices are rising, sellers can afford to sit back and wait for the offers. But when prices are falling, time is their enemy. A listing that has been on the market for 60 or 90 days, even 120 days, that's a seller who's feeling the pressure. Look for those homes. Set your MLS filter for days on market. Watch for price reductions. These are signals that the seller is more likely to negotiate. But here's the key. Don't just chase the discount. A home that's been sitting on for months might have a bigger problem. Poor conditions, bad location, or simply overpriced even after reductions. What you want is the overlap, a motivated seller with a good, well-maintained home. Those are the properties where you can walk in, make a fair offer, and actually get deals done. Number 4, think long-term value. This is the part most buyers overlook when markets shift. Just because prices are dipping doesn't mean every deal is a good deal. You want to focus on neighborhoods that have long-term fundamentals, good schools, transit connections, job hubs, and community amenities. These are areas that hold their value during downturns and appreciate faster when the market rebounds. Think about it this way. You're not just buying a house, you're buying into a neighborhood. If you buy in a strong area during a dip, you're setting yourself up for long-term growth. This is especially true in places like Niagara, Hamilton, and outer GTA. As Toronto remains expensive, these areas continue to benefit from spillover demand. If you can get into these communities during a price correction, you're in a strong position in the next cycle. Step number 5, prepare your current home if you're not selling to buy. If you already own and need to sell in order to buy, this step is critical. In a slowing market, only the best prepared homes sell quickly and for a fair price. That means fresh paint, minor repairs, decluttering, staging. These aren't options anymore. They're mandatory. Buyers today have choice, and they're going to gravitate towards homes that feel like move-in ready products. Remember this phrase, only good products sell. If your home is outdated, cluttered, and overpriced, it will sit. It's clean, well-maintained, and priced realistically, it will move. And that could make the difference between you being able to upgrade into your next home versus being stuck waiting. So let's recap. In 2025, the housing market is caught between falling prices and high interest rates. That creates both challenges and opportunities. The way you tip the scale in your favor is being prepared. Get pre-approved, know your numbers, target motivated sellers, focus on long-term neighborhoods. And if you're selling, make sure your home stands out as a good product that buyers are actually willing to pay for. Do these 5 things and you'll be miles ahead of the average buyer who's sitting on the sidelines waiting for certainty. Because the truth is, the certainty never comes. What comes are windows of opportunity. And right now, one of those windows is opening. So where does all of this leave you? On one side, we've got Canada's Housing and Market Corporation predicting a dip in average prices by 2% nationally, with even deeper drops in Ontario and BC. On the other side, we've got interest rates that are still high by recent standards, but with potentials for them to come down. This creates a rare moment in the market. Sellers are adjusting, buyers are cautious, and the people who are going to win are the ones who are ready, not the ones waiting for the perfect moment that never actually comes. Because here's the reality. Nobody rings the doorbell at the bottom of the housing market. You only know it was the bottom 6 months after it's passed. If you're waiting on the sidelines, waiting for certainty, you're going to miss it. But if you're prepared, if you're pre-approved, know your full budget, target motivated sellers, and focus on long-term neighborhoods, you're putting yourself in a position to act when the right opportunity comes along. That's how you turn market dips into buying advantages. And for those of you who are also selling, remember, only the good products sell. The homes that are clean, maintained, and priced realistically are still moving. If you want to upgrade in this market, make your home that good product, and you'll unlock the ability to move up while prices are softer. Think of this as a window. It won't stay open forever. As soon as rates come down, buyer demand will jump back in, competition will rise, and prices will start climbing again. Right now, you've got breathing room, you've got leverage, and you've got the chance to buy a home without competing against tens of other offers on the same property. So here's my challenge to you. Don't wait for certainty. Prepare now. Line up your financing, know your numbers, and be ready to act. And if you want a personalized breakdown of what this market shift means for you, I've linked my calendar below. Book it with me. Let's figure out exactly what your buying power is in 2025 before this window closes.